All right, everyone. We're going to look at Ondas stock today. And I like to do three things. I like to always look at the earnings, the latest earnings, the current valuation, and then other elements to consider. Um, Starting with the latest earnings, Ondas. I don't know anything about this company. So we'll see. They're listing their balance sheet first. I like to look at the income statement first. So you can see that they have massive revenue growth from last year. So emerging company, um, and you got a gross margin of about 30-40% around there. And I'm not even really compare to last year because this is clearly something has happened to the company where it's not even the same anymore. The G&A took all of their gross profit and then some. Sales and marketing took quite a bit. Research and development took quite a bit. So that puts them pretty heavy in the operating loss. We will look at the balance sheet to see what their cash runway looks like, but that's a pretty big operating loss. And then I'm looking for any other significant below the line items. Interesting that they have some interest in dividend income, which means they must have a lot of cash and marketable securities they're sitting on. And then, yeah. So, all right, burning about 60 million every quarter. So let's look at their cash. So, yep, there you go. So they have over $500,000 cash, and they have some short-term investments here as well. So if they're burning 60 million every quarter, I mean, you got years of cash runway. So they're looking fine there. So this is interesting, and then there's this massive growth. So we'll see if that keeps happening. But healthy balance sheet, good growth year over year, and a pretty good gross margin too. So, all right, the next thing we'll look at is the valuation. And I already know this won't matter as much because it is a growth company. It's emerging. But we'll still look. I want to do. Okay, let's look at ONDS. And while we're here, might as well look to see what this is. Autonomous systems, robotics. So it's a robotics play, which there's a lot of speculation that robotics is the next big hot industry after AI. Life support of heavy engineering equipment for the military and national infrastructure programs. Okay. So that is interesting. All right. So let's go look at their valuation. So they, earnings per share, we kind of saw where that came from. Their operating loss. The shares outstanding is about 500 million. That's not small. Usually, I mean, it depends on the company, but usually a smaller amount of shares outstanding means that the stock can move more rapidly in either direction because it takes less volume to move it. So the smaller this number is, in my opinion, the better. And about 500,000 shares outstanding is not small. That's probably on the higher end. And then you got a very large market cap of 4.55 billion. So definitely, and then look at this. I mean, this thing went from $2 to $9 in like a year. So definitely kind of emerging growth, type of thing. That's a pretty big market cap though. But their sales growth would need to keep growing to kind of justify that. So on our last thing I'll look at is just kind of some other things that I'm curious about with them. Um, what was the year-over-year sales growth? Yep, and we saw that. So that's massive. So if they keep doing that, then they will. Their 4.5 billion market cap is justified. But yeah, like they're saying, come very small revenue base. 208%. What does their market cap of around 4.5 billion mean? Okay, how about this? To justify their market cap of 4.5 billion, what kind of sales growth going forward would they need? Yep, we know that. Extreme future growth. I think close to this current fundamentals, which we already put that together. Price of sales is very high. So, and they give you context, sure, yeah. So they would need to get 450 million a year. Right now they're at about 50 million. And yeah, over 5 years, 60% CAGR. If you're doing a 10x multiple case. So it's expecting 100% year-over-year growth. Yep. And we already saw that. It's priced like a mid-scale defense tech company, still a sub 50 million revenue company. Okay, but let's ask this though. What future contracts and future revenue, because this is all that matters for this company, is future contracts, future revenue growth. Does ONDS already have? Because let's say they have some sort of like contract or deal where they backlog. Let's say that they have a backlog of billions of dollars or millions of dollars, and that helps. Okay. So that's a good backlog. Again, they need to have I think they're like 50 million sales growth, so they need to get to around 450 to justify that valuation they have today. Growing fast. Disclosure orders, share this. Here's their guidance. Okay, so they're guiding for big growth here. Acquisition of Mistral gives access to 1 billion U.S. Army special operations opportunities. Not backlog yet, but okay. So then basically what I'm getting out of this company is that you are predicting that they are going to get big deals with the government, with the U.S. Army, that are going to kind of justify their future shelter. That's kind of what you're planning on, which is fine, but that's kind of what they're going for. So for me, looking at this, I can't say that I would be personally interested. I've become very, very not risk averse, but very like I get scared of really, really high valuations like this one, like this company has, That doesn't mean it's bad. Doesn't mean it's not a buy. Just my opinion. Please let me know what I'm missing. I'm in this to learn more about the stock and the company. I want to learn more about it. But for me, if you're a bull, what you're expecting is unannounced contracts and deals with the U.S. government, pretty much. So we'll see. But yeah, it's interesting stock, healthy balance sheet, long cash runway, valuation's very high. Sales growth looks like it's going to continue to grow based on what management's forecasting. So that's kind of what you're getting for with this one. So interesting. And at least at the very least, you're not, buying at the very top here, $12. So maybe there's an opportunity here. So there you go. There's ONDS.